welcome everyone to Thursday, the 25th, or the 26th of November. My name is Bosun Amofaye Frontier, opening bell. Joshua Debisi, in charge of banking analysis at Vertiva Capital Management, Akintunde Sulaiman from Greenwich Merchant Bank, and the rich man in Nairobi from Rich Frontiers Management, CEO and founder, Ali Kansacho. Thank you very much from Frontiers Management. Thank you. All of you.
Thank you.
Look at the equities market. Just as always, just track these equities for you for the top five, 4 in the green, 1 in negative territory. Not so deep, by the way, 0.03 for the South African GSC. The Kenyan market, the Egyptian went up almost the same margin. The Ivorian BRVM went up 0.53%, but that's softened, by the way, from 130 that we saw earlier in the week. Nigeria stock market, 1.25%. Very good day. The banking sector went up almost by the same margin. So East Africa is the story coming through this morning. I'm going to hit that first with the KCB saying it's buying into Atlas Mara's holdings in Tanzania and elsewhere. That's one big good news. The downside to it is the low-cost invasion in East Africa and perhaps a bit of that into North Africa. The Food and Agriculture Organization spending, putting together another set of billions of shillings to deal with that. The Bank of Uganda is hosting a major event next week to address high interest rates in the country. Ali, let's start with I know the low cost has a whole lot of wider ramifications, but let's go with the banking consolidation with the KCB news first.
Yes, so we saw this announcement of KCB basically buying the Atlas Mara assets in Rwanda and Tanzania. Look, this is not a big-scale transaction. It's more an infill transaction. Atlas Mara had not really got enormous traction in Tanzania. In Rwanda, however, there's some interesting assets that KCB are picking up there. I think, if I'm not mistaken, there is a switch asset which might have been what tempted them into that. But this is a bigger story. The well-capitalized banks across the continent have an opportunity here to grow their footprint and buy assets, I think, at very steep discounts, given the scenario, the pandemic, and the situation we found ourselves in, which is the first recession in 25 years. So I think this speaks to KCB being on the front foot. The bit wider question for KCB is, that they've lost some ground versus equity, particularly in the case of equity's very successful expansion into the DR Congo. Looking at your other headlines, just to touch on Ethiopia, I've been following the tweets from the Prime Minister. He's speaking about the final solution with respect to Tigray province. This is a highly politically volatile scenario. It seems he's looking for a Grozny-type solution, given some of the video footage that I've seen of Grad rocket launchers parked outside Mekele. And I think, we've got to look at this from a geoeconomic perspective, that this could really cause a major problem for the Ethiopian economic story, which is, it's been the poster child of Africa, double-digit GDP expansion. You can forget about that. I mean, I think, Tigray province is a notorious landscape. You're looking at what I would imagine is going to be a prolonged guerrilla warfare situation, which is going to suck in the military assets of the Ethiopian government. And you're then going to be unleashing centrifugal forces across that entire country. So a very high-risk scenario, in my opinion, and a lot. They're trying to accelerate the Ethiopia Telecom divestment, but I think people are going to either demand a massive discount or be reluctant to take on this situation, notwithstanding the opportunity of 110 million people and so forth. Diamond Trust reported results, caught a 28% drop in net profit, slightly better than the market expected. This is one of the tier 1 banks here in Nairobi. Williamson Tea, liquidation of its generator sales unit. But the biggest story really is these tea companies have proven to be a very good store of value in this down market. The currency has fallen, they're getting an FX benefit, the production levels have gone up, the prices are lower, but net, they've done quite well. And for investors who like to stay out, who like to look at more esoteric opportunities, I would recommend they look at some of these agricultural companies. Bank of Uganda to address high interest rates via webinar. This has been a perennial issue for the Bank of Uganda, and it just shows that they're invested in trying to bring lower interest rates in order to boost the economy. Uganda, of all the East African countries, is projected to expand 3.1% this year, which would be the best outcome of any East African community country.
Thank you so much, Ali. Thank you. A very nice overview, overarching view of the East African space. I'm just going to ask very quickly, Joshua Debisi, do you think the Nigerian bank should do more in terms of cross-border consolidation as we're seeing in East Africa? It looks like some of what we see UBA, Access Bank do are more into Central East Africa, but a bit of far less in West Africa.
Yes, so thank you very much, Watson. I think to a certain extent that is the right way to go, simply due to the fact that I think next year, and so that will, hopefully encourage a lot more cross-border trading and a lot of, business within the African space. And so if our banks are spread out across different countries, they will be able to, have more seamless cross-border, transactions. We also have to remember that our current exchange rates and our currency is not very strong at the moment. So all these things would be, strengthened, and the banks would be able to, derive better value if they're in different countries earning in different currencies that would sort of balance out our falling or our weakening naira. So to a certain extent, I agree that it would be a good idea to look at, spreading out across Africa, except when you look at our banks, except for the ones you mentioned, your UBA and your Access Bank, and that EcoBank is already pretty much stationed across a lot of, countries in West Africa. Yeah. Those strategies, it would take a lot of time for them to start to reap, full benefits, simply due to the fact that the level of business we see in most of these other countries, outside of maybe Kenya, South Africa, and one or two other countries, maybe Ghana as well, they don't do the same level of transactions with the same amount of business as they are able to do in Nigeria. And I think that's the main reason why most of the other banks like your Zenith and your GT have not really, been very aggressive in spreading out into these other countries. But I think, for the others, it's a long-term strategy, and they're very much, positioning themselves to be the biggest banks in Africa by going into these countries now while they're still in the development stage and trying to, ride the wave all the way to the top. But that's not really, it might not work for all the banks, I think. So your GT, for example, they're, more interested in diversifying their business and, attracting more income that way, rather than going into other countries and trying to, settle, get a foothold the way your Access or your UBA have done.
Okay, nicely said. Different folks for different folks. They say, by the way, strategies differ, and again, outlook, what you want to achieve as a bank, nationally speaking, as opposed to regional or Pan-African wise. Let's look at this Nigerian West African market quickly, and that's where I'm going to be asking Akintunde Suleiman to talk about the briefing by the CACOVID team yesterday. The central bank led that with two bank executives for UBA and Access Bank. The briefing by the CACOVID, which is the private sector coalition against COVID-19, is now expanding to funding the police. The headline figures now being expanded rapidly to hundreds of billions. This looks like the CACOVID will have a much longer period of activities than initially thought around the COVID-19. There's no sunset clause yet. The treasury bills market is now at ground zero. I'm sure everyone's watching their portfolio right now, and snippets from Kenya this morning on social media that the folks there are sniffing around and say, look, you guys from Nigeria should come over and invest in Kenya treasury bills. 8% in Kenya, near 0% in Nigeria. You could make money if you can just give Ali Khan some phone calls, and he can broker those deals for you with a very decent margin, by the way. Ghana's Fitch got projected slower depreciation, 3.1% for the cedi next year. So let's hit the ground running quickly. I'm sure Ali will talk about the statement by the Senegalese economy minister, says there should be no debt relief for comfortable African sovereigns by the bondholders. That came straight out of the blue because Senegal itself just got some debt relief, by the way. So, Akitide Suleiman, this CACOVID thing with the banks and the private sector, what's your take on this expanded portfolio they just given themselves?
You agree with me that the virus might have slowed down, but the impact still lingers. So CACOVID, I expect will still be existing for the next 1-2 years, and expanding their portfolio across the police force, I think it's paramount. Funding, finance is one. We can say is one of the greatest challenges of policing in Nigeria today. The police force is highly underfunded, and if there's the opportunity for private sector funding, this is highly welcome. 100 billion is a substantial amount, and we expect that this should trickle, into the welfare of the police force. But looking at how huge the police force is again, you might want to consider if that amount will actually really drive a huge impact, because the underfunding of the police force is huge. You see a police station living on less than 100,000 for maintenance and operating costs for a month. I think is highly insubstantial. So we would be expecting this fund to actually trickle down to the last level. If it does that, it will make a difference. If you remember the recent protest that was ongoing across the country, was not solely for to ease or stop our police brutality, but also to improve the welfare of our police officers and the police force. So I think this is one of the great wins from such protests. This has brought this to the fore of the conversations across government, because the police force, we need to state that is a critical parastatal in every society and in every nation. So we must help as private individuals to drive that critical sector, that critical agency to its efficiency and to an optimum level. Aside that, the CACOVID looks to deploy about 150 billion to creating jobs and about 4 million jobs in the next 5 years. I think that is another laudable contribution from them. It's important because you see a lot of youth out there seek employment and seek empowerment, which has not been sufficient in the Nigerian economy. You see, we have about 27.1% of total population unemployed. That is a huge number, and that has a way of trickling down into the general welfare of the economy itself. Imagine what that can contribute to revenue in terms of taxes and VAT for the government. So I think the CACOVID team is doing a great job, and we commend them for that, and we're expecting that. There'll be more into evaluation and monitoring of these disbursements of these funds to ensure that what they were set out to do is actually done. Because like I always say, we need to move away from great intent of policies and programs to great implementation and measurement of those policies and programs. It's not enough to have good intentions, but it's to measure how impactful those intentions have been and how impactful it has been to the general economy.
I totally agree with you. Yes, I was encouraged by the fact that these businessmen and bankers yes, they are doing it for the society, but they're also doing it for business as well. If it's not going to create jobs at the end of the way, it's not going to and increase financial inclusion, if it's not going to increase wealth creation, then why put those billions of money and their time to it? By the way, yesterday you saw Aliko Dangote, Tony Elumelu, Herbert Wigwe sitting at a press briefing. This was a very heavy executive time. These are very tough times, by the way. So if you have those gentlemen sit in a room and doing a press briefing, there must be something in it. They must be ready to make impact and not going the route of the bureaucracy that we already have as a country, because it's going to be a whole waste of time at the end of the day. Because these are shareholders' funds. They are some of their own personal fund, also their own personality they are putting forward in terms of this, talking about the vocational education that Aliko Dangote spoke about yesterday, of course, which will help industries across the line. So I don't want to think that they will allow this go down the bureaucratic structure of the government in terms of disbursement and everything, because at the end of the day, it's just a waste of executive time and everybody's money, and shareholders, investors will ask questions later. If you're intervening in CACOVID, show us the money, show us the benefit over a mid to long term, even if it's not going to be immediate. I think these are very, very important. But you talk about, yes, we need to keep monitoring, and they need to do a whole lot more regular briefing of how this money has been spent, how much donations are coming through. This transparency and disclosure will definitely help. Just going to ask very quickly, Alice Alican's comment on the Senegalese economic minister on the bondholders. Says some countries' economies are comfortable. Are you comfortable there in Nairobi?
I like that comment, because that was a very subtle comment he's making. He's speaking, one, to the strength of Senegal. I think he's quite cheeky, because clearly there's a lot of differentiation going on. I think he probably took comfort from the Ivory Coast Eurobond, which was 5 times oversubscribed and denominated in euros. Yeah. However, Ivory Coast paid a big price there of more than 500 basis points over the equivalent euro security. But nevertheless, that was an interesting development, which I think a lot of people will sit up and take notice. And what he's saying is basically, we don't need to go to the G20. We as Senegal are stronger. The situation in the rest of Africa, which he was taking a pop at, in fact, is very different. And if this trend continues, where there is a serious appetite, then maybe countries like Kenya, even Angola might be able to come back and sell, because I noticed also Peru sold a 100-year century bond at something like 3.25%. So there's definitely a better risk appetite in the markets, which has originated from all this quantitative easing and super low interest rates. But, I think investors need to be aware of the credit risks that are still swirling out there at the moment.
Thank you so much. Joshua, just a quick word from you on the markets, about the treasury bills, treasury market at ground zero right now. And some folks were saying perhaps if you guys can pull some of this money in Kenya, for example.
Well, the truth is, I think investors will be looking at all the options they can get, because it's a terrible market right now. First of all, for the past 6 to 7 or 8 levels, and because of where our inflation has been, no investor has really been getting real returns. Now that we're seeing yields at zero, essentially, it's a bit worrying, and I don't know how long the CBN intends to sustain this level for. I don't know if they'll be able to do it for the whole of 2031. The truth is, even if we see a rebound in our crude prices that would maybe increase dollar inflows to a certain extent, there will still be significant pressure on the dollar. I mean, the CBN is basically saying that nobody should speculate on the naira, but the truth is that's just not how it works. When you create an environment that's ripe for speculation. You can't then turn around and say that nobody should speculate, because we're trading at such a poor value that nobody is really happy. If somebody wanted to go and invest in Kenya at the moment, how would they get their money out of Nigeria? You know, they would still have to go through the black market. And so I think Nigerian investors are a little bit trapped. Foreign investors that haven't gotten their money out already are very much trapped. So I think all looking to raise money in the debt markets, because all you need to do is offer, you know, attractive, realistic rates, and there will be more than enough demand. And I think we've seen that this year with a lot of companies raising commercial papers. I think that will continue in 2021. I don't know how realistic it is that we're keeping our exchange rate where it is right now. I don't want to see it go any higher, but unfortunately, we're not in a realistic situation where we're doing anything to counteract the continuing spread between the official market and the black market.
Yes, I agree with you. But look at just what Ali said at the start of the show about the tea producers in Kenya. Just tea. The tea producers are bringing FX to the table. The only product in Nigeria that brings substantial FX to the table is crude oil. And so, how much FX do you need to plant tea, by the way? Because you got the land.
It's also about climate.
Yes, it's climate. And again, when you look at the country's middle belt all the way up north, that is your tea place. From Zamfara State, I drink Highland tea from Taraba State, for example. I ordered it all the way down there. Rich, much better than some of the one produced in big factories in Lagos. You have it all there. And we can just move beyond crude oil, that the volatility on a daily basis is just wrecking the whole country's fiscal balance and exchange rate, because that's where we are. But again, that's a conversation for another day. Let's talk about Southern Africa. Inflation, 3.3%, food inflation contributing to that. Business confidence, I don't know where this confidence is coming from, but it looks like something is working. I don't know, perhaps from between Ramaphosa, Tito Mboweni, Kangango, and the rest of them. I think they're trying to get something good done. But I was a little bit worried about these Moody's lowering local currency and foreign currency deposit ratings of 5 South African banks. Ali, you have any idea on this?
So, you know, Moody cannot rate banks above the sovereign. So basically, wherever the sovereign is rated, the highest rating for a domestic bank can only be at the sovereign rating. So once Moody's downgraded the sovereign, essentially this was an automatic downgrading for the banks. I noticed that the majority of banks were saying that they were well prepared for this outcome. They'd been expecting it, and therefore they did not see it as causing a potential problem. But I think from the funding point of view, it's potentially going to be a challenge. With respect to South Africa could sell shares publicly in a revived South African Airlines, Tito says, at this point, and I very rarely disagree with Tito, I'm going to disagree that anyone's going to buy shares in that as it's currently constituted, unless he's going to give it away for free, I'm afraid, because airlines are under tremendous pressure. And flight SSA is the epitome of the challenges that state-owned enterprises have encountered in South Africa. CPI hitting 7-month high at 3.3%. That's going to, you know, no one's talking about inflation these days. No one seems to be bothered. Otherwise, you wouldn't be selling T-bills at nearly zero. But, you know, that's worth keeping an eye on. South African Business Confidence Index roars to 40. Great news. Look, I think, you know, maybe the South African are seeing some glimmers of hope now with the vaccine story and with some of the economic rebounds that we've seen in the financial market so far. And obviously, you're reflecting what was done previously. So I think that's a positive signal that people can take away from the economy as it stands.
Sulaiman, do you think we have some measure of business confidence if you measure it right now in Nigeria with the third quarter GDP, inflation, and the MPC? Where do you think we'll be?
It's to be very candid, it's not going to be other optimistic. If you look at the chain of events that has occurred in the past 9 months, we had COVID, we had all the, we had the protests, we have inflations skyrocketing to 15%, we have going up to 15%, we have a decline in GDP, however improving. Now we're having the CBN governor, not happy with quoted parallel market, which is a prevailing rate across the country, because the FX liquidity is impacting a lot of businesses. So doing business in Nigeria at the moment is tough. Even if you're a manufacturer, manufacturing locally and sourcing for your inputs locally, that there's a part of your inputs that you have to import, which is which you need FX for, which will cut into your your cost or your income, and your cost is skyrocketing. So to very candid, business doing business now, it's quite pessimistic, but you just have to show that on. You just have to keep doing it, and ensure that you are keeping a safe margin for yourself. But I do not think it's optimistic at the moment. We will need to resolve a lot of fundamental issues that are impacting confidence of doing business, impacting the ease of doing business at the moment. FX liquidity is one of the greatest issues that we are having now on doing business. We saw our GDP come out negative, however improving. We're expecting that going into the full year. Latest Q1 2021, we should be tilting into the positive. That's good. But with inflation skyrocketing and we're having negative real return, that's not good as well, because investors will look at your market that it's not a good place to come in. One, and if you don't get that inflow, we were talking about FX earlier on. If you don't get that inflow from foreign investors, and because our economy is highly dependent on such foreign exchange, and if it's not prevailing in the market, if you don't have such liquidity, you will not see such inflows due to capital importation. And if they can't get good returns in their investment as well, be it real investment or security investment in the financial market, they would not come in.
I got the point here. Again, I still love the foreign portfolio, foreign direct investments. How about we generating the FX ourselves locally? Because again, what you generate locally definitely costs you less than whatever anyone brings in from outside. It's like your own money than borrowed money, whichever way you look at it. Even for there should be an index or a price for the anxiety that is attached to borrowings. So if you calculate that, the cost of the anxiety and whatever goes into it. So we need to balance, yes, these foreign inflows of FX with our own inflows as well. How do we get it beyond oil? But I think the jury is still out there. We'll just keep working at it. It's a very tight rope, by the way, for the government. It's a very tight one. Very, very tight. Where are we? Okay, North Africa. Just to sum it up this morning on the show. U.S. is applying 23.46 duty impost on Morocco's phosphate fertilizer. Where this is coming from remains very curious, by the way. Egypt's Z Sports is acquiring majority stake in Massa FC. I don't know how much that is, but it looks like money and sports to me. The Tunisia Stock Exchange has stopped the listing of our SITS shares after a 15.09% acquisition by Partner Investments. Ali, you want to give us just about 30 seconds of your take on this phosphate fertilizer issue with the US and Morocco?
I'm totally flummoxed as to why on earth the US is applying such a duty on imports of Moroccan phosphate. I'm very surprised. you know, I think these are the dying kicks of a Trumpian tariff administration. I mean, I don't think it makes sense economically or geopolitically. I mean, Morocco is a partner for the US and Europe, and I would have thought that the US would deal with this with a degree of more sensitivity. So it's taken me by surprise completely, I have to admit. I was looking through the Moroccan economy. It's very interesting. It's been a tremendous story of industrialization. A lot of it has been to do with car manufacturing. And I think it's well worth us looking into that economy in more detail at some point. But this really is a left field tariff slap on that I'm hard pressed to understand what America's trying to achieve by that.
Okay, thank you, everyone. I've got some noise coming through from here. My apologies, everyone. Thank you so much, Leslie, here for today. Joshua Debisi, thank you so much. Akitude Suleiman from Greenwich and Ali Khan in Nairobi. Thank you so much. See you again tomorrow.